Welcome to the Point of No Return podcast, a show at the intersection of technology and strategy. On this show, we interview industry leaders and experts to better understand how they think about strategy during this time of exponential progress.
Hey everyone, welcome to this week's episode of the Point of No Return podcast. Today is a special episode. I spoke with the first ever P&R podcast guest, David Nault, general partner at Luge Capital. David, when we spoke, was at iNovia and immediately accepted being on this no-name podcast. So I'm really happy that he accepted that first time and that he came back today on the show to talk about Luge Capital, what he's doing. If you don't know David, some quick info on his background. He's been building early stage technology companies as an investor, founder, or senior exec member for over 20 years. Before co-founding Luge Capital, David was an investor with iNovia Capital, which, if you don't know, is a leading North American VC fund. Before becoming a VC, David was president of Callio Technologies, an information security compliance provider whose IP was acquired in 2009. Before Callio, he managed business development and partnerships at Pivotal Payments, Canada's largest privately owned payment processor, which he helped grow from a startup to over 60,000 customers, 400 employees, and $8 billion in transaction volume. On the show, we went pretty deep on several subjects. We spoke about how he went from being an entrepreneur to a venture capitalist, what he learned by being on both sides of the table, how the VC industry has evolved since he's joined, the challenges of launching a new fund, which is obviously not easy, and of course the future of fintech and what they're doing at Luge Capital. I'm really happy David accepted to return to the show. He has a reputation that's above reproach, and I really think that you'll enjoy today's episode. David, it's great to see you, man.
Great to be here.
Thank you for accepting to be a guest again. I'm honored that guest number one is back on the show. So thank you for taking the time.
Thanks for inviting me back.
So we have a lot to catch up on since that very first episode. Obviously, you've transitioned in your career, and before we dive into Luge, and I really want to spend some time there, I'd like to talk about maybe the early days as to how you got interested in fintech as an industry.
Mm-hmm. I've always been an entrepreneur or working with great entrepreneurs, and one of my stints was in a company called Pivotal Payments, which great success story, kind of flew under the radar for a long time until they did their $200 million round recently, and worked from the beginning days in helping build that company with a good friend of mine, Phil, and we grew that into almost 100,000 merchants, offering payment solutions for them and all the technologies and the piping in the back end for .coms and point of sale merchants to accept credit cards. And it sort of opened up my whole view on the technologies behind financial services as you look at banks and you look at how sort of old school many of them are, and how this whole industry is evolving at a super big pace in the early stage company games, and it really opened my eyes to fintech, and I got really interested in it, and so that was my door opener.
And Pivotal was obviously it's a great success story. And what were you responsible for over there?
Yeah, the everything that was customer facing. So I held a lot of roles like in many early stage companies, and as it grew, we became a huge team of a couple hundred employees, but it was always customer facing, customer acquisition, channels, partnerships, sales, the go to market strategy. Yeah,
and what was the main the main channel that worked, right? Because you mentioned several 100,000 merchants that are using Pivotal's platform.
Yeah.
So and it was in the early days of the web, right? So was it primarily a digital strategy, or was it a more classic go to market?
I think what worked really well was the old strategy of just making phone calls and calling merchants. Not that we were a telemarketing outfit, but it's getting the merchants on the phone and explaining to them. In the early days, customer acquisition via the web was not as refined as it is now. But a lot of it, I think the turning point was when we really figured out how to sell, how to acquire, and how to turn a rep into a profitable customer acquisition strategy, and just replicated that by hiring, well over 100 reps and just really gaining a lot of market share that way. And, the other strategies too of partnerships, with, website building softwares out there that when you need a merchant account and you build a website. So all of the channels, direct sales, partnerships, and also did a number of acquisitions where we acquired portfolios of merchants.
What inspired you to go from being an operator, being in the trenches of running and helping run a company to the VC space?
Mm-hmm. Well, after Pivotal, I joined a software company in compliance, and we built that for just under 2 years, and we were acquired, and then looking at what the next step was, the VC that had funded it was called iNovia Capital. And I'd known them for a long time from the other side of the fence, and they asked me to join them, and look at companies to invest in. And, next thing you knew, I was a VC and extremely passionate about working with entrepreneurs and sharing my scars and sharing my network and knowledge and really became interested in the whole space of VC, and spent 6 years, a little over 6 years with iNovia.
Yeah. Yeah, and I think it was quite a ride, and I think you're still obviously involved and you're still a partner. I'd love to hear more about your experience at iNovia and working with Chris as to, it seems from the outside such amazing accomplishments that you guys were able to do, like Lightspeed, for instance, and a bunch of marquee brands. What do you think is it of that particular firm, in terms of key to success?
I think, iNovia has grown, and once was a startup and now has grown to be a true platform that helps entrepreneurs from startup to exit and from beginning to scale up with a significant amount of resources and talent and network. And I think it's one of the tier one investors in definitely in Canada, and they're also got a presence in the US, especially with now Patrick Pichette, former CFO of Google, that just joined them, Dennis Kavelman, formerly of BlackBerry, and the whole team there, I think, really helps entrepreneurs. And I loved working at iNovia. Learned a tremendous amount on that side of the fence of how a VC thinks and what it takes to build true global winners.
Are there any insights or work when you were more on the operator side, on working within a company, that you find were applicable, that were useful when you're on the investment side, like being on the other side of the table, helping entrepreneurs? What do you think, as having been in that position before, helped you evaluate companies and deals?
Yeah, I think to be a VC, you had to have gone through some of the life-changing experiences that entrepreneurs go through and the challenges that entrepreneurs go through. I don't see how a VC can help them if they haven't gone through that. And so for sure, I think some of the learnings that I had, and also learning from other entrepreneurs and portfolio companies on what works and what doesn't work, is shared amongst, the whole portfolio of companies.
Interesting. Yeah, like it's a great insight because you've been on the other side, so you're able to see some of the bumps and bruises. So when you're sitting across the table like you are now, like looking to fund entrepreneurs, you can provide some insights that if you're just a venture capital, it's a little bit tougher to do if you haven't lived it, right? I'd like to talk about your transition, right? So it's like great growth. Obviously, it looks like iNovia still has its wind in its sails, like you mentioned, with some really key people. I'd love to understand the transition, right? So, like from what I understand, Luge was the brainchild of Caisse de Dépôt with Pierre Miron. How did that happen? I'd love to get a little bit of the backstory as to how they approached you, how it came about, and how the genesis of Luge Capital came to be.
Yeah, I had a great relationship with iNovia and still have a great relationship with iNovia, and the team there is very much about setting their team up for success and entrepreneurs up for success. And at one point there was this opportunity where we knew that the industry was looking at the venture capital industry, or the fund of funds were looking at setting up a fintech fund. And so we knew that capital was looking to be put into a fund. A team was needed, and just about that time, I was having discussions with iNovia about the whole opportunity in the vertical of fintech, and when that opportunity came up, had a discussion on whether or not to spin off of iNovia and help create this fund with my partner Kareem in Toronto, and we did, and kind of got the best of both worlds, because we're able to leverage iNovia by doing it in partnership with iNovia. So all of their network, their team, their back office, and the processes which they have in place to give us the maturity of a second fund and a first fund. And that those stars aligned really well, aligned with the whole team, and so the journey began to raise the fund, and spun off, and then attracted Desjardins, then attracted Sun Life, La Capitale, which are 3 financial institutions, and understood what their challenges were in terms of innovation and fintech. So we had got industry insights, had access to a first close of $75 million, and then on early June we launched the fund.
What was the most difficult part of making that decision? Was it an easy decision to make once, the idea was on the table? Was it like, this makes a lot of sense? Or did you have, sleepless nights and, wrestling with it?
Yeah, we named the fund Luge Capital, right? And luge, when you think about it, to whether a street luge or winter luge, to make that decision to the point of no return, no pun intended with PNR, but to go down that hill extremely quickly, and the twists and turns and life-changing experiences felt fitting of a name, because really that's what it is, because a fund is a commitment. It's a long-term commitment. It's not something that you walk away from a year later. It's a 10-year cycle minimum, and you're building companies. So yeah, it was a challenge. It was, a leap of faith. It's, everything that comes with it. But, like an entrepreneur, you, if you're passionate about it, just go for it. And that's what we did.
Was the biggest challenge actually raising the fund, like being able to approach, limited partners, get them to convince into the thesis? I'd love to hear about the challenges of because the period of okay, great, so, I'm going to launch this, to okay, it's public and we're doing it. There's quite a few months that went by, right?
Yeah, typically raising a fund takes over a year, and we did it in something like 6 months. So there was definitely a motivation from the LPs. So, but much like a company raising money, and I think there's a lot of similarities, is that, you got to push it to a close. You got to bring your lead. You got to, get an alignment of the players, the terms and conditions, and just make it happen. And I think that's what got it over the finish line is I think the business case made sense. Our investment thesis made sense. The players around the table made sense. Everyone was motivated to get it done. And, but I'd say the challenge, like in many new businesses, is just making sure that you can hit the ground running. And so, in terms of the deal flow, in terms of the relationships, in terms of getting the team ready, up to speed, and getting everything aligned, because, at the end of the day, entrepreneurs that are raising capital don't wait for you. So if you can't turn around quickly, so I think it's, the raising of the capital is challenging, but it's just, launching from day one and doing your first deal very quickly, which we did. A company called Flinks, which we're happy about, and we got a number of other deals which we intend to announce.
Okay, very cool, very cool. And I also love the name, just like you said, the analogy of speed, right? So being able to match just as the market goes faster, or at least it seems that it's going faster than ever, being able to help an entrepreneur turn around very quickly. Now that you've launched, I'd love to understand maybe the thesis behind Luge. So, I know it's in the fintech space. Do you have the types of entrepreneurs, the types of ideas, and the types of companies that you're looking to fund? I'd love to dissect it a bit more.
Mm-hmm. Good question, because entrepreneurs that raise money from a VC, there's got to be a really good alignment with their thesis. And, our thesis, fintech is a sector, we're specific in fintech, but within fintech, there's a lot of other promising sectors. How AI applies to to the whole market of fintech is really interesting because financial institutions have a significant amount of data that they're sitting on, and it's a gold mine of data, but they're very protective of it. And so through our fund, having the relationships with the financial institutions, we're able to gain access potentially to some of that key data and build solutions with AI first companies. And so I think that's part of the thesis, but it's also about with the relationships that we have, we're able to get industry insights in some of the challenges that financial institutions have. Just as an example, you look at the speed at which which loans are being approved online by new, nimble players, and financial institutions take a lot longer to do that. And so, how do they utilize some of the best of breed technologies and learning algorithms and new kinds of alternative data for credit scoring is really fascinating. And there's tons of opportunities in that sector. Insurance tech is also a promising sector. In payments, in blockchain, so and in security is not stopping. There's more and more transactions that are happening online, and everyone has a mobile in their hand, and that opens up opportunities for security issues. So there's tons of momentum in those sectors as well. So, we're opportunistic in fintech at large, but we've got really insights from the financial institutions that gives us a direction.
Yeah. Would you say that that's like your unfair competitive advantage, being able to have your LPs around the table that are actually potential large customers of what you're funding, right? And you're also able to understand their pain points, but through a technology lens.
And that's exactly it. Is that first, we're with our investors can be customers, partners, data providers, and can provide feedback on the opportunities that we're looking at so that we can also give good feedback to entrepreneurs. And regardless if we invest, we try to give them some good feedback. So I definitely feel that that's a good value add for us. The fact that we only do fintech is our whole network, not just our investors, but the people that we build the relationships with and the talent that we meet that could potentially play a role in the companies are all parts of the value. And definitely, our backgrounds, my partner, Kareem in Toronto, he was formerly with PayPal in their corp dev, and previous to that, he was with a company called Zoom, which was acquired by PayPal, I think an $800 million acquisition doing cross-border remittance. And he's got significant, in-depth technical knowledge that helps entrepreneurs, and coupled with myself, that can help companies scale and do the customer acquisition, I think are all parts of the value proposition.
Have you evolved your thinking around how you decide to invest, like in terms of what you look for in a company, and in terms of like the different variables? Obviously, it's contextual, right? If you have a rock star entrepreneur starting, you're probably less inclined to look at the idea, let's say. But love to understand a little bit as to like what are the main variables you look at, the main components when you're looking at a deal, when you're looking to partner with an entrepreneur.
Yeah, sure. The founder VC fit, I think, is super important, right? So it's all about the team for sure. That's where it starts. A bad team will take a good idea and turn it bad, and a great team might take a mediocre idea and turn it into great. So it's definitely the team first, founder market fit, founder VC fit. So can we work with them for a number of years? But founder market fit, do they really understand their market and the challenges that they're up to? There's a lot of regulatory, compliance issues and obstacles to get through. Can they get through those? Can they scale a company to create true venture capital returns? And we don't just mean, scaling it across Quebec or Canada. We mean, potentially a worldwide player in the space. And then, is this a large market? Is there a defensibility? Is there really a tailwind in the industry that this is going to catch a wave of change that's happening? So it's not just, an old market that's not going to change. Is there true momentum? So, the team, the market, the competitiveness, is there a business model behind it? for sure. We're not going to keep funding things that just burn money forever. But in terms of stage, we're mainly a seed and Series A investor. So we are a startup and early stage, but we also have an element which is very, very early stage. So, a rock star team that has a great idea that we believe can deliver, and they may have an MVP, they may have a first product, some beta users, or access to some sort of an unfair advantage. We will back them. We also have ideas that come from our industry insights, which have yet to be created and solved, and we call that the sort of the co-creation model, where there are some ideas that we have, and if we've got a rock star team, we might be able to even give them an idea. So it's a little bit of that, but mainly an early stage with check size varying between a couple $100,000 to a couple million, and as the companies grow, either through iNovia for growth capital, or the Caisse de dépôt, or other LP relationships, we can write much larger checks to really keep the company growing.
Now that it's been a few months since you guys launched, what would you say are your current priorities? Like, you've gone on the market, you've closed your first deal. Curious to see how you're spending your time right now to essentially get more deals, grow the fund, and obviously continue on the path that you guys have started on.
Yeah, the challenge of a VC is always to be in the best deals possible, and back the greatest entrepreneurs as possible. And great opportunities have the choice of money and have the choice of investors. There's more money than there are great companies to put it in, and I say that with a grain of salt. But basically, there's money if you've got a great company, and entrepreneurs know that, and so it's making sure too that we're invited to the table, or we're looking at those deals. There's always the challenge getting into the great companies. Second is once you've invested, it's helping the companies, that's where your reputation is. And the entrepreneurs speak to entrepreneurs, and a reputation it takes a long time to build. And so every step of the way, it's proving your value, proving what you promise you deliver, utilizing your network, and helping the companies grow. You're as good as your last deal. You're as good as the success of your entrepreneurs is the success of the fund. So at the end of the day, it's making sure that those companies, you do everything possible to help them grow and succeed.
Yeah. So at this early stage of your fund, it comes back down to people, like you said, right? You guys are a people business. You have to make sure that the entrepreneurs you're working with, they're satisfied, they're happy, much more than doing content marketing and promoting the brand, right? So I feel it's an interesting approach. Is there anything in your in the current phase, since it's only been 5-6 months, anything keeping you up at night? Any challenges that you think are top of mind?
I think the access to capital for our companies, as they grow, is definitely important. And if there was a market that shifted and something major happened and the climate became much more difficult for companies to raise funding, it could be a challenge down the road. But I think ultimately what's always the biggest challenge is that, we live in a world of uncertainty. We don't control the companies, and nor do we really control the market. We just try to align the stars as best possible and work around that. And so really, I think it's about just backing the right companies in the right space at the right timing and giving them the right amount of resources to hit the next milestones. But aside from that, there's not much keeps me up except for the excitement for the next day.
Yeah, very cool. And I'd love to talk about the industry with you, David, because it's almost a decade you've been in the VC space and you've seen the evolution of the Canadian ecosystem. What's changed particularly at the early stage, seed and Series A level? Have the companies, like the types of companies in those deals, but also the level of maturity of the companies in those deals, right? Like, I feel like a company right now at a seed has much more metrics and a much more robust track record than 5-6 years ago, where it's like, hey, you have a PowerPoint and you're able to get a check. Now it's like, okay, well, show me the traction, right? So that's, I think, one example. But I'd love to hear it straight from someone that's an investor.
Yeah, that's a really good observation, because the competition for money is bigger and bigger, and the reason is because the cost to develop a company is cheaper and cheaper, or less and less expensive. But and I say that the cost of talent and so on is still as expensive. But to get a website, to get to start coding, there's a lot of entrepreneurs that push the bar further, deliver more before approaching investors, and there's a significant amount of very, very early stage companies with an idea that approach investors. So the more that the entrepreneurs have to show, the better it is. And so definitely over the past couple of years, we've seen entrepreneurs get better prepared when meeting with investors. There's more incubators and, pitch competitions and mentoring, and the whole ecosystem, I think, helps the companies get better prepared. And there's a lot more transparency into, what VCs look for. So that's definitely helped. The size of the rounds have gotten bigger. The valuations have gotten bigger. And that's a double-edged sword too, because if the market is willing to pay higher valuations, the company's got to achieve more things to raise their next round of funding, because they want to get a better valuation at their next round of funding. And if their valuation is already high at their first round of funding, they've got to achieve even more to grow into that value. So that's definitely a challenge, and sometimes a red flag for entrepreneurs to watch out for. I think you just got to raise the right amount of money at the right valuation that sets you up for success. And that's an evolution in the space. But I would say there's another dynamic, and I think we see that with Luge Capital, is that we're an industry focused fund, and funds that are very, very general, and they may not bring as much focus and experience and network within the specific sector. So we're seeing funds that are being raised which are very, very specific to a sector, as opposed to being a very general fund. So the value add of the partners and the sector, I think, is something. And there's also another dynamic which is happening in our space, is that there's more money for growth companies. We're still not fully there, and the ambitions of entrepreneurs, I think, are growing as well, to grow truly bigger companies. So those are some of the changes.
Yeah. You spoke about the availability of capital, right? And it feels like we're it's a little bit frothy market right now in terms of some of the valuations and the availability of capital. What do you think are the biggest downsides as an investor, but also as an entrepreneur, to watch out for, right? With some of these valuations that seem a little bit out of measure. But again, it's kind of an uninformed opinion. It's just an observation I'd love to dive and get your opinion on.
I think that the things to worry about is raising too much money too quickly, because that there's expectations that come with that money, and you got to deliver what you promise. And when you raise a lot of money, the expectations to return a lot of money are even higher. And when you raise at a higher valuation, also, the next investors that come in are going to look at what you've delivered with that money. And when you raise money, it's really to deliver certain milestones. And if you overpromise and underdeliver, investors will not put in more money into the company. And that's so every step of the way, I think, managing growth is important. The other one is definitely access to talent. Talent is very competitive, definitely in AI, but in all the different sectors. Where this whole industry is booming, tech is booming, early stage companies are booming. There's a fierce competition for talent. And so, as companies grow, they got to acquire that talent.
Yeah, definitely. It's a challenge. I see it on my end too, trying to hire people. There's definitely a lack of good people, because they're not waiting in the unemployment line. And I'd love to maybe understand your point of view on what's happening in the space you think that no one's talking about, or maybe is underappreciated, right? So you spoke about access to capital, talent, and everyone's talking about AI. But maybe just from your point of view, what do you think deserves more attention or is misunderstood?
I think the how to grow out of your local scene. We see sometimes entrepreneurs that have a great local customer or partnership, and even though they're just launching, if they don't have a vision of how to grow out and not be just a big fish in a small pond in a local market, so I think the looking to say how do we build this out, and are we the best out there? And you compare it to kind of an athlete. An athlete that's at a regional competition might be super fast and super good, but the moment that they start to travel and get out to, the American Games or the nationals or, eventually the Olympics, you realize the competition is super fierce. And we see a lot of Canadian versions of, or even Quebec that might be forgotten because of the French language, the Quebec version of. And, those kinds of companies, eventually they will be beat by somebody who's bigger and better with, a bigger coverage of the world. So thinking just globally, and can you truly become a competitive player? Because if not, eventually you will be surpassed.
Yeah, it's a great insight. I find it's like really thinking bigger, like, the 5-10x. What advice do you give to, your portfolio, your entrepreneurs in terms of like how early should they start thinking about, expanding beyond, and like you said, trying to compete at a higher level, so they can improve?
I think from day one they should be, but I'll take a quick step back, and there are businesses out there which are not all true global scale, and that is fine. We should have businesses that just are great businesses. That's all. And, they're doing well, and they're helping the economy. They're hiring people, and those entrepreneurs might be very happy with that kind of a business. But that probably doesn't align with the venture capital, which we're the custodians of money of investors that want a return, who manage maybe other people's money who want a return. And we invest in entrepreneurs that need to provide a return. And we need that return because the failure rate, we're in a very, very high risk. And within that high risk sector, startups are the highest of the risk. So in return, we need to make sure that we have a few out there that repay the fund. So these companies have to truly become global. But it's okay also if there's some that do not. But it's from day one. It's every move that you make when you're hiring somebody. Do they have the capacity to grow with you? Do they understand the mission? Do they believe that they can be, do they have the skill set to, develop a best of breed product, sell to the best customers, sell outside the market? Do they have a customer acquisition strategy that makes sense? Are they competitive? And all these, are they thinking? So from day one, I would say, think global.
Yeah, that's a great insight. In terms of specific technologies or companies, what are you excited about? What are you looking at, like beyond the band, right? You mentioned about blockchain or AI, but maybe a little bit more precisely, what types of applications that you guys are considering investing or looking at into the near future?
Mm-hmm. The utilization of data, I think, is huge. We've got there's a lot of information out there that helps make decisions. So I think things, for example, with the lending algorithms to help understand creditworthiness, I think is super interesting because there's a whole slew of people that might not have the standard credit scores, are not really adapted to them. Think of immigrants that come here that might have a great credit back home, but they have nothing here, so they can't even get a credit card. Somebody who moves, if I move to the U.S., I can't even get credit. So things like that. I think process automation as well. There's a lot of manual processes within financial institutions. How do you utilize AI and process automation for that? Looking at how do you acquire insurance? If you go in and apply for insurance, and you got to give blood and pee in a cup and answer 16,000 questions. But there's a lot of those questions that are probably already answered in the data that exists about you. And how do you make it easier to do that? I opened up a bank account for my daughter, brought my daughter through the experience, and it took about 2 hours, and she walked away from there and said, that was just crazy. How come I couldn't do it on my phone? And she's right. So I think, things like that, are definitely incredible sectors.
I guess one of my last questions, I'm curious. So blockchain, bullish or bearish?
I'm bullish on blockchain. Definitely bullish. It's early days. There's a lot of, it's a bit of the wild, wild west, and there's a lot of shiny things, but I definitely believe in the power of blockchain, and it's not going to disappear anytime soon.
Yeah, I agree with you. It's going through a bit of a dip right now, but the whole currency thing.
But the blockchain and the amount of transactions and the amount of activity that's on it has been growing exponentially. Yeah. But I would say crypto has definitely gone through some decrease in value. But blockchain is.
I agree with you. I think it's like they're getting the how should I say the bubble part out of the market and letting people actually develop right now, because there was too much hype. Get the people that are into the hype out of the market and let people develop real applications, I find. So within 12, 24, 36 months, you start seeing a lot of interesting stuff. But the whole ICO craze, for instance, it's like, okay, we need to get that out of the way. I feel for like real startups and companies to develop. So at least that's my quick thought on it. David, I'm really respectful of your time. It's been super interesting. I guess last question would be is where can people find out more about yourself or Luge Capital?
Yeah, the best way to be introduced to a VC is through a mutual connection. An introduction. However, of course, I can be reached through a number of different ways, and the easy is the social venture builder on Twitter, on LinkedIn, or directly through our website. We have a form that's an entrepreneur can fill out, and directly via email, david@luge.vc, or connect with Nectar and give me a shout.
Super cool. David, thank you so much.
All right. Thanks a lot. Thanks for having me.
Thank you for listening to the Point of No Return podcast. Never miss an episode by clicking on the subscribe button on iTunes or Google Play.